Hey everyone. So today I'm going to talk about what is the bid-ask spread. I mean, you must have heard this terminology hundreds of times, but what is it actually? And how do you actually calculate the right bid-ask spread in the major market? So, short video, I'm going to compare a couple of things. I'm going to look at the S&P 500 index. Then we will look at the S&P 500 futures markets. Then we will also compare it with the ETF, which is the SPY ETF. Fine. And then for comparison purposes, I have added Apple stock in there too. So I'm going to show you how to actually look at the bid-ask spread in any given market. Now, because we trade 45 days out, that's where we sell premium when volatility is high. So I'm going to actually go as far back as I can into a monthly cycle. Now, if you look at the SPY ETF, the monthly cycle is 28 days away. And then the next one is 63. So I'm not going to go into 63 because we don't sell into the 63 one. But we stay around. This is where I initiated the positions. And now the cycle is now down to 28. It should be a good comparison with, a 45 to 50-day market. So let's dive into it and then see how it looks. Now I'm going to give you a real example of what we actually do. So based on those strikes and that delta, we will look at the bid-ask spread. I'm not going to look at the at-the-money spread because we do not trade that. We sell out of the money spreads and out of the money options. So I'm going to look at the 17 delta, which is our sweet spot. That's where we initiate the trades. And therefore, I'm going to look at those strikes and see what the spreads are. Now, let's go into SPY ETF option first. Again, 28 days out. I'm going to select the 17 delta. Now, I've already noted everything down here on the spreadsheet as well, just so that it's easier for you to visualize things. The put sides are here, and then the call sides are below them, right? And the SPY ETF is this row. So I'm selecting strike 487, which is 17 delta. If I was to start a position or initiate a trade, I would have done it at this strike. So it makes total sense to me to look at these spreads, compared to any of the spreads or any other expiration cycles. So my bid and my ask is 453 versus 460. So I'm bidding 453, 460. This column is showing me how many days out I am, which is 28 days to expiration, and I'm at 17 delta. The bid is 453, the ask is 460. Perfectly fine. The difference between the two is 7 pennies. And then you have to look at the mid price. The way you find the relative spread or the percentage is where will you actually get filled if you were to open this position. Now, because we sell options, again, I'm going to hit the bid and I'm going to be on the short side of it. We are selling to open. And that's what this ticket shows, that we are selling the option. We're not buying the option. And then the number of options do not matter right now. But this mid price, if you can see this here, it says mid, right? That's the price that you are most likely to be filled at. When you open this, unless you put your own limit price in, which I normally do, if you just leave it at the market, this is where the market is. You will get filled at the mid price. So the mid price is 456. Now, 456 is added here. And then if you check the relative spread, which is basically the difference divided by the mid price, gives you the percentage of it. So you know the bid-ask percentage in SPY ETF is very, very tight. The tightest there is in the SPY market, in the S&P main index market. If you do the same thing for SPX index, you will see a higher percentage because the options are wider. And if you look at the same thing in the futures market, which is what we trade most of the time, 90% of the time right now, it's lower than the actual SPX index market. Now I'm going to show you the SPX index as well on the put side, and the call side is exactly the same. You can just go in the trading platform and then check however you want to look at it. But SPX, again, 27 days out. This one is, because everything settles into this one expires on the same day as well, like on the 16th of May. But I think this one expires in the morning, the AM cycle. So that's probably why it still has 27 days. And then I'm going to go down to 17 delta one more time on the put side. So I have a couple of options. I think I picked up the middle one. I picked up 48.90. 48.90 is there. This is 48.90 strike. Okay. My bid is 44.80. My ask is 46.70. Obviously, ask is always higher than the bid because you're selling it for more money than you're buying it for. Therefore, the ask is always higher than the bid. Okay, same thing on the call side as well. You will see the exact same thing. So the difference between the two is $1.90. And then the mid price, again, you have to, because we will be selling if we were to open a position here, we would have been selling this option at a mid price of 45.70. So that's what I picked up, 45.70. And the difference, relative spread, meaning the percentage difference, like how much are you going to lose if you were to trade this option in and out? And the more the option goes into the money, the wider the spreads get. So you've got to be careful with that. Out of the money options, I have tighter spreads versus in the money options, versus ones that are getting closer to the money. So $4.16 here. Now compare that with Apple. The indices are on the call side. SPX spread is around 7%, 7.25, and you can go into the numbers on the platform and check. The markets are closed right now, so it's easier to go and check. If you want to check the call side on the SPX options, go into 17 Delta again. I think I found one here. I chose, which strike did I choose? 56.10. Yes, so 26.60 and 28.60. 26.60, 28.60. The difference is exactly $2, which comes to about 7.25. Now, if the markets were open, this would have been a little bit tighter and moving around quite a bit, but it would have been closer to these numbers. So it doesn't matter if the markets are closed or not. These numbers would have been almost similar. So you can tell that the most liquid options here are in the SPY ETF. Then it's the futures options, which is what we trade, and then the stock side, you can pick any top market cap stock, meaning Apple, Meta, Amazon, whatever. Their spreads, relative spreads, would be wider. They will not be as close to the index spreads. So this is how I look at the spreads, relative spreads. Hopefully this was useful. Next time you trade an option, you know how to look at these spreads, because if the spreads are really wide, you know what percentage you're actually going to lose going in and out of the trade. If you look at any other stock, I know all these expression cycles give you like the actual absolute dollar amount, but then those dollar amounts are not useful unless you compare it with where you get filled. Now, where will you get filled is the mid price. So you have to compare it with the mid price of the option where you are most likely to be filled at. And therefore, this is what that comparison is. Hopefully you like it. If you do, subscribe to my channel. These are the kind of videos I post. So one more thing very, very quickly. I have a couple of free options, free guides here. If you want to check out the naked options defense checklist, how I defend naked options, both on puts and call sides. I've dumped everything here. Last 10 years worth of experience, actual trading, hypothetical looking at things, back testing, everything is in this checklist. Go check it out and see if it's helpful to you. And then that's it. Just stay tuned to the channel. Thank you very much. Bye-bye.